Hi guys, so welcome back to another video. It's your game forex, and I'm back again with another video. So in this video, my previous video, some people are asking me what's the spread with the broker you're using, how do you select the pairs that you trade, and how do you do your top-down analysis. Okay, so I'm going to turn this so you guys will see my face properly. Okay, so first of all, for those of you that have been asking me how I do my top-down analysis, how I select pairs, and also how do I do with spread, because actually that spread affected me this week. I don't know if it's only me, but have you been in a trade and the next thing price hits you out but the trade is still valid? Okay, that's spread. Okay, I'm going to explain what spread is. So without further ado, so guys, for those of you that are asking me, Mira, how do you select the pairs that you currently trade? Okay, for the pairs I currently trade, which are EU USD, GBP USD, CHF, and USD JPY, okay, and I recently added AUD JPY. I'm not going to take credit for that. It's basically my tutor that actually did the work. He was one that back tested and actually found out that his strategy works in this pairs first. So yeah, that's how I got to know about this pairs. And the idea behind it is that you don't want to be trading pairs that your strategy are not working well on, because every market moves differently. Okay, because you don't want to have a situation whereby you're trading Euro USD and gold and your strategy is working well in Euro USD, and at the end of the day you're also taking a trade in gold, but you're taking lots of losses in gold, and then it's more like you're making money with Euro USD and giving back the money back using gold. So you have to make sure to understand if your strategy works best in that pair. I think that's another way for you to know the pairs you're selecting. And also spread is also something you can account to when you're going for a pair you want to trade. But before that, I want us to do a breakdown on how I do my top-down analysis of officials, how I get a trade I want to take, before we get into my Exness terminal to show you guys, explain more about spread to you all, and explain to you all what literally happened this week in terms of spread of a trade that I took on CHF JPY. Okay, so first of all, when I come into the chart, I'm looking for the direction of the market to see where the BFIs are making moves to, or where price is moving towards. And as you can basically all agree that price is pushing to the upside. Okay, so that's basically then right, we're going to be looking for a way we can actually join the trend. Okay, so now as you have a break of structure here, this low was one that caused the highest high, so which is to say we have a higher low that caused a higher high that broke what structure. So now we can now determine that we have our swing structure right here. So now we're going to call this a strong low, because what it actually did its job, which is that it broke structure and caused a higher. So we're going to, so the next thing we're going to do is that we're going to map this out when we start having a significant pullback. Okay, this will not be a weak high, because what it has not performed any job and price has already basically start pushing to the downside. So next thing we're going to do is to map out our internal structures. So our internal structures are here. Okay, so to bring it down again, I've constantly explained this on my channel here, that basically what I trade is I trade the pullback and the continuation, whereby let's say we have a swing structure and price has a pullback, then we're looking for internal break of structure for us to take a sell down to a demand level if you're going to be looking for a buy. And basically what you're basically looking for demand, we're going to continuously take a buy to continue to the upside. Okay, that's basically what we do. So we'll look for another internal break of structure to take a buy. But I've actually been backtesting as well and fishing away how I can just take a direct buy to go up, even though it's against the internal break of structure strength here. Okay, that will be a topic for another day. So that's basically what we're now looking to come and take out the weak swing high right here, and we know that we have a break of structure right here. Okay, so that's basically what this is all about. So since I've mapped out the internal structure, the next thing I'm going to map the demand zones. Since it's buys, you're going to be looking for buys. Okay, and then this other extreme demand. So but now we're going to be taking a pullback, because we are seeing that price has closed below this low after this candles pullback. So we have internal structure to facilitate the swing pullback. So we set our trade here, and our stop loss was above the high. Okay, and we're just targeting for 1:2. I think in my previous video I shared this idea too. Okay, and then that's basically it. And I'm also going to do this same analysis I did here in euro, so you guys can see. Okay, so now in euro USD, you can see that we're pushing down. Okay, that means we should be creating series of lower high and lower low, and here was the last low that broke structure. And after this broke structure, price came down, did a significant pullback, created a high. After it created a high, price came down, but it failed to sweep or break. It failed to break this low right here. So now we can call this a sweep of liquidity. So which high did this? This high did, and eventually after price went ahead to do what? To break the high. So then we now have our current swing break of structure. So one of the mistakes I currently usually used to make before is that after this break structure, I don't have any business with this again. Like I don't have any business with this side again. What I should be focusing on is the two swings that caused this break of structure. So now I'm going to have low there, strong swing low, and I have my weak swing high here. Okay, so weak swing high, strong. So the next thing I'm looking for a trend to come down for me to look for a way for me to buy, like for price to come down. Okay, for us to look for a demand zone, for us to take a buy to target this this week strong week high, which is basically all the things I did this week. But I'm still going to share the pictures of this trade for you guys to see what later happened. I got wicked out a lot on trade this week, and then this is the first demand we have, and then this is the second demand we have right here that's already been mitigated. So ideally what we're looking for is to set a buy here and price way. This was the trade I looked. So target for 1:2. So okay, just 1:2 for a buy, and then we'll go to CHFGPY and set it as well for a sell. So basically now you guys have seen that it's just the same thing I basically do, and this is just basically how I do a top-down analysis. I basically use one time frame for both analysis, entry, and everything. That's a 4-hour time frame. So that's basically. So now to get down to spread, to explain what spread is simply the difference between your bid and ask price. So whenever you execute a trade, you're going to be executing at the ask price, and then the bid and the ask price will continuously move. I know some of us have gotten to a situation whereby we get taken out of a trade, but the trade is still valid. That is to say that the bid hits you out and the trade is still valid. Okay, so today I'm going to help you guys understand how to calculate your spread and also how to account for spread, so probably to avoid such thing happening. It doesn't remove the risk from trading, it's just maybe something that could help you manage your trade properly. Okay, so basically now as we see this, we want to understand something to account for the spread, but we have to understand the difference between the ask price and the bid is actually spread, and also your spread is calculated in pips. Okay, so the difference there, if you see like maybe 2 pips, 3 pips, and the way you can actually see it, when you get your MT5 quote, you see some small figures that appear there. Those figures below are actually the spread. Okay, some brokers, the spreads are actually wider. Some of them will see they don't collect commission, but you'll now find out that the spread is wider. Okay, and also the kind of currency that you also trade will determine if the spread again will be wide. Okay, so that's why most traders try to focus on major pairs. Okay, they focus on major pairs. So if we go to the broker I use here, you also want to calculate and know more about the currency that you're trading, and here is something that this is a calculator in the Exness terminal that can actually help you. So first of all, you see that we have standard accounts. These are different accounts, and for each account you can see they have raw spread, they have zero spread, pro, and also standard cent. So for each account you have, their spread also varies. Okay, but Exness actually reduced their pro account spread by 22% across I think 28 major and minor FX pairs, and also you can even do your comparison to check them out. Okay, and also if you want to sign up with Exness, you can use the link in the description below to check them out and take your time to explore the services and see if they fit your trading style before signing up. Okay, and so as usual, you also have to make sure to understand the risk involved in trading and choose account type that suits you best, even your goals and even your strategy as well. So now if you put the account type that you have, then the next you're going to look for is the currency that your account is on, and then you're going to type in the pair that you want to check. So for me, I'm checking CHF JPY, and then for a lot size is 0.01, and then leverage is 1:100. So now what I'll do is I'll calculate. You now see that this is the amount, that's the margin, this is the amount I need to have in my account for me to be able to place a 0.01 trade, okay, in my standard account, in my Naira account. So this amount, which is the margin, is what is kept aside for me to be able to take that trade, okay. So the spread cost is 181 Naira, okay. That's to say, I don't know if you guys have gotten to the situation whereby if you should place a trade, then the trade will go slightly in drawdown before it moves. If you start moving, yeah. So that's also what spread is. Those are the way the broker make money, okay. So once you enter a trade, the spread cost is what you see that you're in drawdown of it. So the commission right here is basically 0. So that means Exness do not take commission for a standard account, and a swap for sure. That means if you hold your short position overnight, Exness do not take commission for that. And they don't take swap, and swap long, they only take 64.67 kobo Naira for a long swap charges. So for pip value, that is to say for every pip your trade should move in CHFJPY, this is what you make, okay. That's basically, this is something that can help you to get to know more about what you're doing. And then for us to, we're still going to go back to FSP, so I will explain how you can account for that. And there's also an easy way, since Exness has a terminal. And for those of you that complain about the discrepancy, as you can see right here, let me use for example the markets, which is BTC, is open 24 hours and 7 days a week. So as you can see, we'll have the red line, we'll have the bid, the red and the blue line. So let's say for example, if you should take a short position, your stop loss might actually be still valid, okay, but you still see that your stop loss is here, okay. But if price should actually, this blue line should hit your bid, okay, it will actually take you out of the trade, yes, even without this ask price coming in. I know some of you don't even have this ask and bid price in your chart, okay, but if that blue line should just hit you, you're out of the trade. But I'm still going to show. So one thing again, I do advise people, for you to avoid all this discrepancy, you can actually do your analysis on your Exness terminal, place your trade there, see where everything is to avoid the ups and downs. Then another way you can actually do that, so since now we're going to be playing this, let me play this trade so you guys can see what actually happened to me this week on my prop firm account, okay. So now if I should play this trade forward, so guys, do you see that? Now let me play this. So do you see that this actually went for, but price did not hit my stop loss, right? But actually my prop account, this trade actually did what, hit stop loss, and that's where I was like, oh, this must be spread, okay. And if you really did hit stop loss, you see this dot line is always following the position to go. If it actually hits stop loss, what it will do is that it will stop there, it won't follow it down. So this is how you can be able to account for spread when you're taking a trade. So now if you have set your stop loss and everything like this, okay, because there are sometimes price will come close to your stop loss and it will not hit you and still go to profit, or maybe the spread in your broker or the profit in your trade might take you out. So what you will do is, if you go to this input, you see your stop loss level here, which is 20300, okay. So now you now go to the figures that you see underneath your maybe your profile, that particular pair that you're taking a trade in. Check down there, what is the figure there? Let's say like 2, maybe the spread is 2, right? So now if you go to, what you now do is that you now add, because you know in how to calculate your pips is basically for JBP, for yen pairs is 2 decimal places. Do you get it? So in 2 decimal places you have 100 right here. So what you do is that you just input the 2 right here, okay, to account for spread, okay, so that even though the bid price should come closer, you're accounting for spread already, right? So it's something that helps. It doesn't take away the risk from trading or you taking losses. It's something that helps, because this trade, I actually took this trade, but if you guys should see, I've already been taken out even before later on the loss happened, before later on that even price went to take profit, okay. You guys will see price went to take profit. And again, I was even setting for a buy at this zone right here. Price did not even tag me in before price started going up in my notion right here. CHF, I think that was on Thursday that one happened. Like, it's, see it here, I was waiting for this buy right here, but price didn't really tag me in. And yeah, and for the sell, this was the sell. I even got taken out before that. And even GBP USD trader, I took a buy too. I took a lot of wicked out stop losses this week. As you can see, price weak me out and still price start buying. So how to now do the buy part of that particular accounting for spread is, if we should go back to FS replay right here, as you can see, we already tried this. And to play this forward, you see that what we're actually looking for price to go forward or to take out the weak high was what eventually happened, which is something I was showing you guys like this, to go take out the weak high. Eventually price did. Okay, so now if we should go to Euro USD, let's see what happened in Euro USD right here. So as you guys can see, price also beats me out in Euro USD, which was a trade I also took this week, beats me out. So like I say, this is not something that will avoid you from taking losses, but sometimes it can help. So since it's a buy and you want to account for spread, you still go down there, take the figure of that particular account, which is your spread figure, and then come to your stop loss here, and you're going to subtract 15878. So now, since this is the figure, what you do is that you're going to add that pips, okay, so that you subtract it, so that your stop loss will do what? Go lower. Okay, you take that figure, you subtract it from here, and then you remember, for you to calculate your pips in Euro USD or any pair compared with the USD, that's the major pairs, you're going, it's in the 4 decimal places. So 1 2 3 4, that's 7. Okay, so from this 7 now, you're going to be minus, I'm just using this 7 for example, you're going to be minusing 4 out of this 7 if the spread is 4. You get it? So that's basically how you do it, and to give your trade more space, that even though price comes in, some people also call it buffer. Okay, it's something that also helps, but the easiest way is to just do your analysis in your Exness account and avoid the whole issue. So I hope this video was insightful and you got knowledge out from it. You got how I do my top down analysis, the knowledge behind the pairs you should select. Okay, and you also want to focus on major pairs, okay, that has high trading volume. There's a lot of buying and selling. Don't want to be trading exotic pairs that are mostly illiquid. There's a lot of cap. Okay, so yeah, I hope this video was insightful and you got knowledge. If you did, leave us a like and subscribe to the channel. Okay, so peace.